Gold, 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 gold. That's what CNBC host Jim Cramer said in response to a question perplexed about the massive gold buying that's been happening as of late. Greetings, members one and all of the Salivation Nation. We'll explore these words, actually just one word, and what's going on today in the markets. Yes, Jim Cramer is a little perplexed here. He said he's scratching his head over the short-lived pre-market equity sell-off on Monday. And he says when he sees this endless buying for gold, it makes me think for the first time that people are just saying, I'm really fearful. And what are they fearful of? Well, we'll kind of explore a little bit of that as well later on here too. But gold has indeed been on a tear lately, trading at its highest level since April 2013 amid its current winning streak. Cramer said he doesn't believe Iran to be a paper tiger, so it makes sense that investors are running to the perceived safety of gold and fixed income in the wake of the U.S. drone strike that killed top Iranian military leader Qasem Soleimani. It's not just the treasuries, he continued. The gold buying has been endless, over and over and over, and really, in a sense, it's been happening before the strike. You know, I think tensions all around and uncertainty, in other areas too. It just feels like gold wants to go to $1,700 to $1,800. Now, that would be very negative for the stock market, and he's perplexed why the markets aren't going down, too. So looking ahead, CNBC reports here how it has surged to more than a 6-year high on geopolitical turmoil and inflation fears. Gold futures hit $1,590 per ounce, which is their highest level since April 2nd, 2013, when they reached $1,604. Gold was also headed for its 9th straight day of gains. Precious metal has been on a tear over the past 2 sessions after President Trump authorized the assassination of Iran's top general, sparking a move out of riskier assets in favor of safe havens, such as gold. Gold surged Monday to its highest level in nearly 7 years as investors fled to riskier assets. Of course, figures for February deliveries settled up 1% at $1,568.80 per ounce and hit a high of $1,590.90 per ounce. That's the metal's highest level since April 2nd, 2013. This is a bullish development, and while stretched, should lead to higher gold prices in the weeks ahead, said Mark Newton, managing member of Newton Advisors. He added that the precious metal could soon reach $1,650 to $1,700. This is sort of in line too with our sort of resident insider, and that is Angel Music. He has been posting here lately, the past couple days here, advising us where the metals are going. In fact, he even was correct in his prior assessment, saying for both gold and silver. But silver's kind of backed off a bit lately here. Let's actually pause for a moment and take a look at where silver is. As we look at these markets here from Kitco, silver's up a little bit, but not a whole lot. It's kind of pulled back somewhat. It's now $18.22, only up 0.58%, whereas gold is up 0.83% to $1566.20 right now. Palladium is up. Platinum has taken quite a hit. It's down $18. That's interesting. And Rhodium, of course, it's climbing up there, $6,400. It's in the stratosphere as far as I'm concerned. Fascinating to see that indeed. On Sunday, Iraq's parliament voted to expel foreign troops from the country. Now, by foreign troops, does that mean all foreign troops, including Iranian troops? I don't know. The Iranian regime also said Sunday would not abide by the uranium enrichment limits set by the 2015 nuclear deal. By the way, that nuclear deal actually allows Iran to continue to enrich, just slows it down. But how would you check on that? How would you monitor that? Are they allowing inspectors in? That deal from 2015 was a flawed agreement for sure. But nonetheless, gold prices, talking about this assassination of the general, have rallied 1.6% over the last few days. Stock prices tumbled last week after Soleimani was killed. The S&P 500 and Dow Jones Industrial Average had their worst trading day in a month on Friday. The Dow added to those losses on Monday. The S&P 500 and Nasdaq were marginally higher. The killing of Soleimani has heightened geopolitical risk, as he was a well-known figure in Iran, wrote Keith Lerner, chief market strategist at SunTrust Private Wealth. The Iranians may take time to calculate their next move. If they do decide to retaliate, risk assets could come under additional pressure. Investors have turned to gold in part because the metal is seen as a hedge against market volatility and economic slowdowns, particularly if they are sparked by geopolitical tensions. We found that spikes in geopolitical tensions lead to higher gold prices when they are severe enough to cause currency debasement. Jeff Curry, head of commodities research at Goldman Sachs, said in a note that most often happens during wars or military escalations. Therefore, additional escalation in U.S.-Iranian tensions could further boost gold prices. The tensions between Iran and the U.S. come at a time when the global economy is fragile. Last month, the U.S. registered its biggest contraction in manufacturing activity since June 2009. But still, all other measures of the economy are up. But that is probably going to spark some fears too, seeing where that is. But we'll see what the next month brings. Gold is also used as a hedge against inflation, which could rise if oil prices keep spiking. Crude prices jumped more than 3% on Friday amid worries that the U.S.-Iran conflict could disrupt the global oil supply. On Monday, oil briefly rose more than 1% before erasing those gains. U.S. inflation has remained stagnant over the past year, leading the Federal Reserve to cut interest rates 3 times in 2019. The Personal Consumption Expenditures Price Index, the Fed's preferred measure of inflation, rose just about 1.6% in November. That's well below the Fed's preferred inflation target of 2%. Now, with that in mind, if we get phase 1 trade deal signed, then that could lead to increased manufacturing, especially in the agricultural sector, and those numbers could turn around. We'll see what happens on January 15th when that agreement is signed. That's if it's signed. Hopefully it will be. Everybody's expecting it to be, but it's one of those things where I'll believe it when I see it. Market Watch has reported on this as well too, and the economy certainly is, it's a concern globally. Obviously, what happens around the world does affect the United States as well, but we'll see how it plays out with that. This article talking to us a little bit about the dollar index, which was down 0.22%. That's a measure of the buck against a half dozen currencies. It was down 0.2% at 96.661 and has posted weekly declines in the last 2 weeks. A weaker dollar can make gold more attractive to buyers using other currencies, and lower bond yields can also help boost the comparative appeal of gold against government debt. So gold continues its breakout higher, as it is now the highest level since April 2013, wrote Peter Bukvar, Chief Investment Officer at Bleakley Advisory Group, in a Monday research report. He remains bullish, but cautioned not to buy it on geopolitical concerns because, as stated, they are usually temporary, but instead because the dollar continues to weaken and real yields continue to fall. So that is the thing, and the economy now here in the United States is strong, aside from those manufacturing numbers that showed those losses since 2009. But that's one indicator, and other things, and that could change relatively quickly. But I do agree with the assessment here. Be careful when you're making purchases. Don't be rash, because some of this stuff shall pass. And it doesn't necessarily mean we're going to hit into some major escalation or war. And keep in mind that the United States is far more advanced, in not only in the technology of war, but also in being able to make precise strikes and the like about any threats that come about. It doesn't mean that some won't get through. Obviously they do, but we're obviously on alert and expecting something anywhere really in the world. So we have to be very careful and cautious. But nonetheless, this strike against this official, despite what the media would like to tell you, does not necessarily mean that it's going to be that much more of a threat or any more at all. In fact, if anything, it's probably makes Iran less of a threat because of how crucial this guy was in planning and had been planning for some time in attacks against American forces that is well known. Even Al Jazeera had reported on what this guy had done and how important he was, not only to the Iranian Quds force, but only answers to the Ayatollah, but also to instability in the region, promoting terrorism around the world there. So that's not a factor as he was actively planning. So there you have it. So we'll see how this all plays out. But nonetheless, don't believe the hype that the media tells you about all this stuff. And, take the red pill on this one, folks, and that with regards to that. Here are the other factors we got to take into account. Obviously, we've got to be sensitive to what the economic measures could be. We are overdue for a recession, and it certainly could come. But I think if we get this trade deal signed and we continue to practice policies here in the United States where keeping taxes low, less intervention by the government, then anything could come. It may be short-lived. So I think that's kind of where we're at. But regardless, we want the economy to do well, but we hold on to gold and silver, but especially gold in times like this, because gold has really been reacting even more so than silver in this case. So there you have it. Post your thoughts below. Would like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.